Hi guys, welcome back to my channel. Kelvin here. So I don't usually talk about Tesla, but this time is different because there's a 3-for-1 stock split coming up. And like all real Tesla investors, the one question on our mind is, will Tesla go to the moon after the stock split? Maybe. So in this video, I will answer everything you need to know. What is a stock split? Why do a stock split? And whether you should quickly buy the stock before the split. #FOMO, or wait till after the split to buy. But before I start, I would greatly appreciate it if you can help to tap the like button and subscribe if you haven't done so. In return, I'll show you a cat chilling with chicks. Alright, let's start right now. So earlier this year in March, Tesla hinted that there will be a stock split coming soon. And immediately after that tweet, Tesla jumped up by 5.7% in pre-market trading. What lah? But then it fell by over 40% over the next few weeks. Sell liao! Then on June 10, after Tesla announced that it will be a 3-for-1 stock split, the stock has gone back up by almost 30%. What lah? But wait, the stock split is not finalized yet because shareholders will still have to vote for the split during the annual shareholders meeting this Thursday on August 4th. And if the vote fails, sell liao! Okay, you don't have to worry too much because this vote is likely to pass. So what exactly is a stock split? Let me show you. This is my chai fund, without fish of course. This is before the split and this is after the split. This chai fund is now split into 3 portions. Overall, it's still the same chai fund. The total amount is still exactly the same, but now each of the portions is smaller by 1/3. So this is basically a chai fund split, or for Tesla case, a stock split. Naturally, the question that you will have is, if the amount is exactly the same, then why split? They're too free is it? Okay, there are a few benefits for having a split. First, the stock becomes cheaper. So if Tesla is $900 now, after the 3-for-1 split, Tesla will become $300. Now, when a stock becomes cheaper, either through a crash or a stock split, there are a few benefits. The first benefit is mentioned by Tesla themselves. In the SEC filing, they wrote, unlike other manufacturers, which we shall not name, we offer every employee the option of receiving equity. And in these past 2 years, the stock price has risen by 43.5%. And we believe that the stock split will help reset the market price so that our employees will have more flexibility in managing their equity. Okay, let me translate that for you. Aiya, our stock went up too much. Cannot lah. The short sellers also cannot bring down the stock price one. Never mind. We bring down the stock price ourselves. Before the stock split, if investors want to take profit or rebalance their portfolio, they will have to sell the entire $900 stock, which may not be what they want. But now, after the split, they can decide if they want to sell a bit or sell everything. So that's the first benefit of a cheaper stock. It's easier to manage the stocks. The second benefit is that the stock becomes more affordable to buy. Yes, there are many brokers that let you buy fractional shares, like Webull. But speaking of Webull, quick pause. Webull is the latest stockbroker in Singapore. With Webull, you can now buy US stocks, US options, and Hong Kong stocks for a low fee of $0. Yes, that's right, it's zero commission trading. Webull also supports fractional shares, so you can now buy stocks with just your $100 Ambao money. But the most important question is, what's their sign-up gift? If you sign up now, deposit at least $1,965, make 6 buy trades on either US stocks, ETFs, or options, you will get $100 worth of free Google shares. This promotion ends on 1st September, yeah? So if you are interested, you can sign up with my link down below. With that being said, let's get back to the video. Okay, not all brokers let you buy fractional shares. For some broker, if you want to buy Tesla share, you will have to buy one entire Tesla share, which costs around $900 currently. And that is expensive for some people. If you are from Singapore, it's still quite affordable. But if you are from Malaysia, the stock costs over 4,000 ringgit. You basically have to all in your entire 1 month pay just to buy one Tesla stock. Then it grabs the rest of the month. So with a stock split, the stock becomes more affordable to buy. Because of this, a stock split can theoretically attract more new investors to buy the stock. Second benefit of a stock split, liquidity will increase. Currently, there's about 1.04 billion Tesla outstanding shares. After the split, it will become 3.12 billion shares. When you have that many shares going around, the trading volume will theoretically go up. When that happens, the bid-ask spread becomes much smaller, making it easier to buy and sell stocks. Third benefit, option strategies become a lot more affordable to do. For those who do not know, one option contract equals 100 shares. So let's say if you want to do a cash cow put on Tesla, you will need to prepare 100 times $900 cash or 90k just in case you get assigned 100 Tesla stocks. Ain't nobody got money for that. But now, after the stock split, you only need to prepare 30k, which is still a lot of money, but it's definitely a lot more affordable to do. So those are the 3 benefits of a stock split. But now comes the most important question. Will the stock price go up after the split? Because if you know that the stock price will go up, you can all in right now and quite big after the split. Okay, let's look at some stock splits that happened in the past. In 2020, after Tesla announced the split, the stock went up, split, then went back down. Same for Apple, announced split, go up, split, came back down. This also happened for GameStop. Announced split here, stock went up, split, then came back down. So does this mean that we can buy after the split announcement, then sell one day before the split and what big? Well, yes, but no, because this pattern doesn't always happen. For example, Shopify announced a split here, then the stock crashed all the way down to the day of the split. Same for Google, split announcement here, stock dropped all the way down to the day of the split. Same for Amazon, split announcement here, stock dropped all the way down to the day of the split. So it seems like there's no real fixed pattern. So how? Luckily, a guy named NotJobs on Reddit analyzed 2,000 plus stock splits over the last 3 decades to see what's the effect of stock splits. He found that in the short term, if you buy the stock one day before the stock split is announced, then sell one day after the announcement, you will be outperforming the S&P 500 by 1.4%. Now, this result is expected because stock splits are usually seen as a good thing, but it's impossible to know when a stock split will be announced. So this data is actually quite useless. Then what about buying one day before the stock split, then sell one day after the stock split? On average, you will only outperform the S&P 500 by a bit. So again, this data is quite useless too. But here are some useful data. NotJobs found that the longer you hold the stock after the split, the more you'll be able to outperform the market. For example, if you bought one day after the announcement, then sell on the day of the stock split, you will only outperform by 1.26%. But if you hold for the entire year, you will outperform by 3.45%. However, if you buy on the day of the stock split, the returns are not that great. In the first week or the first month, you will still underperform the market. You will have to wait for about 1 year to be able to outperform the market. This result is expected because on stock split day, the stock usually falls. So you will need to wait for a while before the stock comes back up. Now, this is where it gets more interesting. If you hold from the announcement date and never sell, basically hodl all the way, on average, you will be outperforming the market by 216%, which is a lot. 2 separate studies done in 1996 and 2003 found the same result. They found that on average, split stocks tend to outperform the market by 8% in the same year and outperform the market by 12% over the next 3 years. Also, just to be sure, NotJobs also decided to check the success rate of this strategy. Other than that one case, all the other holding periods has about 52 to 70% chance of beating the market. For example, if you hold it till 1 week after the split, there's a 60% chance of success. Or if you can hold it till 1 year, the success rate goes up to 70%. So it's quite clear that the stocks that have undergone stock splits tend to go up over the long term. But hold up, this doesn't make sense. If the stock split doesn't have any effect on the stock, then why does the stock outperform after the splits? Okay, that was a trick question. Yes, you're right, stock split doesn't have any effect on the stock. but rather it's because stock splits usually happen when the company is thriving and their stock price goes up too much. Of course, we also have some companies that do stock splits but aren't doing so well, like GameStop and Shopify. They do it not because they want to bring the stock price down. The price is already down even before the stock split. It's usually because the company is trying to revive the stock by making it cheaper. But on the whole, if a company is doing well before the split, it will do well after the split. That's why we usually see stock split companies outperforming the market over the long term. Okay, here are my thoughts. As you can see, stock split has no effect on the stock other than just to make the stock cheaper. In the short term, unless you have bought the stock before the announcement date, it's very hard to make a profit of it. And it's definitely even harder now with all the recession, war, and inflation that's going on. In the long term, stocks that underwent stock split tend to go up. But it's not because of stock splits, but rather it's because they were originally good stocks in the beginning. So rather than trying to time the stock splits and pray that you will make a tiny profit, it's better to just focus on the fundamentals of the company. Because as the data has shown, if you are able to buy and hold good companies over the long term, you will do well. Because stonks. Overall, I'm still bullish on Tesla. And for that reason, no matter whether there's a stock split or not, I'm still dollar cost averaging in as usual. Anyway, that's all for today. Hopefully, this helps you out. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.